Devang Mehta joining us on the show to talk to us about what the fundamental of the market is looking like. Devang, hi, good to be speaking with you. We were just chatting with the management of J Kumar Infrastructure, and they were quite bullish about the kind of order inflows they are seeing and very confident about, beating their guidance as well. If at all you have view on J Kumar or any other infrastructure name that you like?
Thanks for having me on the show, Anisha. I think, yes, clearly this is one space: infrastructure, be it capital goods, be it infrastructure, roadways, ports, railways. I think all these companies have been on a roll. And that necessarily because there is order activity, there is execution which has picked up, there is public capex, there is government investments, there is also private capex and private investments which are coming into a lot of such fields. My sense is that, yes, not commenting specifically on J Kumar Infra, but we'll add a host of capital goods stocks, be it Siemens, be it in the bearing space or motion management, something like a Timken India. Not suggesting to sort of as bias, but these are some companies which we track very closely. There's been a lot of order activity, right from railways to ports to a lot of such companies doing greenfield and brownfield project. I think this looks extremely interesting space, be it automation, be it capital goods, ancillaries, power ancillaries. This space, I think for the next 2-3 years becomes more structural rather than short-term cyclical.
Right. Devang, we'll just come to you since we are speaking about infra and capital goods. In a moment, we have some very interesting news from the sector. My colleague Samir is here on the phone line, and he's telling us that the interim budget may actually indicate a continued capital expenditure thrust in the infra space. He's got more details. Samir, tell us, what are your government sources telling you?
So sources have confirmed that government is likely to continue its focus on the infra part regarding the infra expansion. And in the same direction, the railway sector is one of the key focus area where railways, in terms of expansion, government is likely to spend around $7 trillion, more than 7 lakh crore for the expansion of railway network over the period of next 10 years. And this will include laying of new tracks, laying of new railway tracks, gauge conversion, doubling and tripling of railway line. And in addition to this, the signaling upgradation is also in the agenda of railway expansion. So these are a couple of areas where the massive spending we can see in the next almost 10 years. And the quantum that railways is looking to spend is somewhere around $7 trillion. And this, if you see in terms of expansion, so in the last FY, there was a track laying of around 5,200 kilometers. And railway wants to continue this momentum for the next couple of years. So if we take by this number around 52 to 5,500 kilometers track laying of each year, then railway understands that they will be able to lay a record 50,000 kilometers of railway tracks in next 8 to 10 years. And for the same, the government is likely to spend around $7 trillion. And it is not just for the railway sector. We are also picking up from our sources that the similar kind of focus, the similar kind of investment will be done for the road sector, for the highway sector, and even for the shipping sector as well.
All right, Samir, thanks very much for that. So clearly, the news is that the focus of the government will remain on big capex in 3 areas: shipping, roads and railways. And we've seen that some of these stocks have been actually doing very well in the run-up to that. Anisha was referring to how J Kumar Infra is also saying beyond roads orders coming in. In fact, not only that, Devang, we were speaking to RK Forgings the other day. There is a company Forging which is doing very well, going into one IPO, the Happy Forging IPO, which is coming in. These forging companies overall, so far in the last decade or so, were only focused on railway or maybe CV forging. Now they are going deeper into complex machining requirements in railways, perhaps defense as well. Any of the names you like in large forging, even Bharat Forge for that matter?
I think, yes, Ajay, the theme that you're talking about is extremely interesting. Why? Because one, the forging company, as you rightly said, were considered to be normal forging companies. Now they are getting into specialized type of forgings. Even I was mentioning about a company called Timken, just referring to it because people feel it's just a bearings company, right? Be it SKF or be it this, or there are a couple of other companies as well. But most of these companies are now into specialty bearings, right? So they're into motion management. A lot of these companies even supply to the spacecraft or the metros or the monos or a lot of the specialty things which is required. So I think this is a thriving sector. When in India, I don't last recall, you've seen such a type of a manufacturing revolution. At least in my career, I've never seen this type of a manufacturing revolution. So my sense is, yes, the forging companies you are mentioning, the bearing companies, a lot of these ancillary power type ancillary companies, there is earnings to still come. Right, a lot of these companies have re-rated on the PE basis, price to earning. Wise, you will find a lot of companies at 40, 50, 60, 80 PE. But most of these companies' earnings are going to come in the next 3 years. Your PE would again sort of compress and look very ridiculous. So the sense one gets here is that buy companies with good earnings and cash flows. I think this is more structural, as I mentioned earlier.
In fact, let's hear out RK Forgings. We spoke to RK Forgings management earlier in the day, and let's hear out what he had to say. Okay, we'll go to RK Forgings in a moment. What else is actually happening? Some of the API companies, Solara, Active Pharma, look at that, 10% up move. Divi's, also a pure play API, is surging 5%. Nuresh, do you have a chart? Can you check out the charts for some of these API stocks?
I actually saw a very big block happen today, and the stock has finally given a turnaround after correcting all the way in the last 2 years. So it looks interesting on any fade off tomorrow. Out there, the stock has already made a very huge move in the day, but any fade off tomorrow would be a buying opportunity. DVs, on the other hand, looks more promising because the stock is now back to that resistance zone of 3850 to 3900 roughly, which has been the high for the last almost 12 to 18 months. And this might be the 6th or the 8th attempt around that area. If it can sustain, then finally the downtrend which had started in 2021 could change for the stock. So as a risk reward trade, DVs with a stop loss below 3750 looks pretty promising.
Okay, point taken. So that's about some of these API majors, what's happening with individual names. What's the latest on Vedanta? There was some flash on the screen, perhaps looking at some sort of fundraising, etc. Okay, yes, so they're looking at approvals to amend terms, waivers on some bonds. So let's see.
Actually, over the weekend, we forgot to speak about it. They raised almost a big sum of money from Oaktree Capital, which is a distressed, fund by Howard Marks. Yeah, it's run by Howard Marks at 12%. It's not confirmed yet, but people are talking about who's saying that 12% bond is what they've raised from Oaktree.
I mean, 12% is not too bad of a rate, I would say, in terms of the corporate, right?
Pretty high, I would say.
I thought it won't be too bad given the quality of the company, right? What AAA gets you, what's 8%?
12% annum for a company of this size. My assumption is that they could have managed wrestle through any lender at a much lower rate, right? So people are saying that is there things not that great inside? What exactly is happening there? 12% they had to raise money at. So that was the point of discussion.
Okay, interesting one as far as Vedanta is concerned. But let's just focus and talk about some of the other big buzzes as well. On the losing side, RBL Bank continues to trend lower, so 4% cut there. Of course, in terms of the big gainers that we have seen, it continues to be the public sector entities itself. But real estate, Devang, that's one thing that's worked very well for people in this year, and people have made big amount of wealth as well. Should one now book profits out of the real estate stocks, or do you think this is likely to perhaps the story of re-rating might continue into 2024?
The re-rating should continue, and why I made this very emphatic is that I've been talking to a lot of these developers, just studying the market for the last 2-3 years, and what I've seen in the last couple of con calls of most of this real estate majors, be it Macrotech or be it DLF, whatever they are launching, good projects are just being jumped into and are just being booked with all the vengeance. And ideally, the luxury side of this consumption, real estate consumption, and make no mistake, this is more not an investment. This is more now taken as consumption post-COVID. And ideally, the 4 BHKs of the world and 3 BHKs, the larger inventories are getting sold off immediately as soon as it gets launched. So my sense is that one, the realizations have started to improve for a lot of these companies. The cash flows have started to come. The execution has picked up for a lot of large size developers. Of course, the smaller developers still face problems. But yes, for the listed entities which you're talking about, most of this have ensured that every quarter they will have definitive cash flows with earnings as well in picture. So my sense is that this sector looks still at the cusp of a larger rally. The next 2-3 years seem to be interesting. And of course, the allied companies of real estate, be it your home improvement theme or building materials, be it the polycaps of the world, which have done exceedingly well. all these companies would sort of keep on doing well for the next couple of years at least.
That's about the real estate pack and how one should look at probably either booking profits, but Devang believes that the re-rating is likely to continue in that space. Devang, what do you think will actually cause the re-rating in the banking names? And I'm specifically talking about large private banking names, your Kotaks and HDFCs of the world. Or do you think this time-wise correction that we have seen throughout 2023 is something which will just get more protracted as we go into 2024?
I think it's very clearly the arrival of foreign investors, which has been a little longer this time. As such, we have seen glimpses of them coming in again, sort of booking profits in between. But this sector had been a crowded trade all through the last decade. Last couple of years, if you would have seen, there is a lot of capex-oriented companies, discretionary consumption-oriented companies, all this, even commodity companies, so for that matter, cyclicals, all this has come to the fore and done very well. Whereas this sector, particularly the PSU banks did well. But if you look at an HDFC bank or for that matter, even a Kotak bank, there has been a good time-wise correction over the last 2-3 years. The sense one gets is here, there has to be a large flows which should come from the foreign institutional investors. One second, a time correction consolidation has made this companies reasonable on the price to adjusted book value basis. So there is some value still left on the table for financials and as such this private bank. So I think sooner than later, you will see if market has to sort of move up from here, there has to be flows which would be directed at this space, because most of the other spaces are slightly getting expensive or a little more expensive. But here is some value which is still on the table with a short thing that credit growth is going to happen. We are talking about 19-20% type of credit growth, which we have never seen except for 2003 to 7-8 period. So I think, yes, this seems to be an interesting space as such if somebody has a 1.5 year horizon as well.
Okay, point taken. So that's a view coming in on some of these private banking names. But in the meantime, let me take a look at the price volume buzzes as well. Oil India has formed a higher low for 5th consecutive session. It's trading above its key levels as well. Laurus Labs, a bit of a breakout is what we are seeing, has managed to hit a 52-week high on an intraday basis, forming higher highs for 8th consecutive week. And Tata Chemicals, of course, has seen quite a bit of breakout from the reverse head and shoulder pattern, has hit a 3-month high, and the volumes are almost 4x the 10-day average that we have seen. Naresh, from these 3 names, what would be your top bet, if anything at all?
So Oil India and the whole oil and gas sector looks pretty promising. Continue to like Oil India as well as ONGC, because these names have done nothing for a long period of time. So Oil India, after the listing, the stock has been sideways from, it was at 300, 330 back in 2009 and has done nothing till now. And finally, we are seeing a breakout. So this could be a huge re-rating, very similar to what happened with power names last year. Same is the case with ONGC. The stock today at 200 rupees is where it was in 2006 to 2008. So that's a breakout which is happening on a 5-year scale as well as zero return over a 15-18-year period. So oil and gas as a sector looks very promising. ONGC and Oil India could continue to do well over the next 6 to 12 months.
Since we are talking on that subject, there are 2 other stocks in the mid-cap space which have done a bit of move this year. One is Ceylon Oil Exploration. Again, it's a very old stock. Naresh, remember we used to look at it almost 10 years back. It was a promised stock, did not do anything. But last 6 months, this stock has also doubled. Then there was HOEC, the East India-based oil exploration company. Moved a bit after Mr. Elango came in, then went sideways. Have you looked at the charts at these, Naresh? Ceylon or HOEC?
Both these companies have gone through a lot of changes, corporate actions, etc. But Ceylon has clearly taken the lead in terms of taking a trend. The stock broke out above that 350 mark, which was a 7-8 year high. And since then, it has slowly and steadily scaled up. So Ceylon looks the most promising one because it's gone into a good trend post the corporate action. So at current levels also, Ceylon looks very promising. Hindustan Oil, on the other hand, has corrected recently, but is trying to make a base around that 160, 190 mark. So overall, it could be a slow and steady recovery towards 220, 250, but Ceylon looks much more promising and could continue and eventually cross into new all-time highs.
Devang, what do you make of the primary market action that we have seen today as well? It was Moti Sons that listed with almost a 100% surge on its stock price, almost 80-90% higher than the issue price. And of course, you also have Ola Electric, which is now lined up perhaps at the early part of 2024. From the recent listings, anything that caught your attention?
Trying to study a little bit of the primary market's behavior on secondary market and sort of vice versa. The IPOs this year, most of them have left something on the table for the investors, and some of them have been excellent quality IPOs and excellent quality papers, be it Tata Tech or be it the certain Gandhar Oil Technologies or some companies, even for that matter, Domes. All these companies had some sort of a business model, and most importantly, 42% of the new money raised this time from the market was also a new money for the companies. It was not only offer for sale. That's also one thing which is very important. And as investors, one should realize that as well, that it was not only exit for private equity investors. Second thing is also a good chunk of promoters and private equity investors got exit this time around, which again gives primary market that sort of zinc which it requires. So my sense is a thriving secondary market right now is putting a sort of a good behavior for even primary market. Also, I think the companies that have come up with IPO this time have been broad-based across the economy. It is not that only tech IPOs have come or only the new economy or the new age IPOs have come. Yes, remember last year, a couple of years back, only the Paytms and the Zomato of the world, where there was as such no cash flows or earnings used to come up with IPOs. So ideally, it's not an euphoric behavior which I am seeing in the markets right now, which is a positive sense. And you should just pick up on merit. There are a lot of good companies which are getting listed, but yes, post-listing, they are trading at phenomenal valuations. That's a little bit of a skepticism I have in my mind.
Okay, in fact, let me go across to Sharad now to understand what the khabar is on Dalal Street and what the chatter is in the dealing room. Sharad?
The buzz in the dealer rooms is that Mahindra Lifespace developers is seeing a buying coming in from certain domestic financial institutions. Now do remember that the volumes have also picked up, coming in roughly 14 times its 20-day average. And importantly, if you look at the stock, the DI buying has been continuous over the last 2 weeks. That's what the dealers have stated. Now the stock is up almost 50, 100 and 200 DMAs, important technical levels, and the key DIs which are already invested in the company. As per the recent shareholding pattern in September, they include the names such as Kotak Mutual Fund, HSBC Mutual Fund and even ICICI Pru Mutual Fund. Now some channel checks also suggest that in the fourth quarter, there might be 2-3 projects which would be getting launched, and of course these are the other related projects in the real estate segment. And overall, the company is targeting a 5x jump in terms of revenue of pre-residential sales over the next 5 years.
So that is one stock to watch out for, Mahindra Life. They've got some beautiful properties across the country, and I happen to be, in one of them recently.
Which one?
Mahindra Life. And if you look at all the other real estate stocks, this one has actually underperformed. This one did not run up the same way. Underappreciated. DLF, Oberoi has done well. Godrej has come back.
I think there was a leadership change as well that happened.
So maybe this one stock can be a dark horse now that others have run up. This one haven't, and market is looking for names right now on the stocks which have not done well. But the entire sector has got a tailwind. Would you look at Mahindra Life?
And actually add a Suntech Realty to it as well, because we're talking about underperformance. That's up only 20% this year.
Devang,
yeah, so I think no, I've not looked at fundamentally about it, but I completely agree with you that it's a company, it's a corporate which has done very well in each of the sectors which it has been over the last few years. And yes, I also seen a couple of properties being constructed by Mahindra Life. Seems very interesting. Yes, I haven't drilled down the numbers, so wouldn't be in a position to comment or recommend. But yes, this seems like a catch-up candidate, as you rightly said. Most of these companies right now are in a catch-up phase. The companies which have not done well, the laggards are sort of rallying in this type of market as well.
So that's the take coming in on some of these real estate names. Incrementally, what's buzzing around is actually Castrol. It continues to power ahead. There's a further gain on that stock. You also have Adani Green, which has actually managed to perk up quite a bit in the last few minutes. Tega Industries, it's one of the stock where there was an initiation last week, I believe. Then the stock had rallied, and today as well there's a follow-on move. It seems 8% higher on that one as well. So a lot of these stocks which are actually buzzing around. Devang, two sectors which were in focus on account of that was, of course, power, and secondly, the entire consumer durable space with the AC sales and all, with the skyrocketing temperatures. Voltas is one stock, Kunal is quite bullish about, which is the name that you like from the durable space, and one stock from the power basket.
I think, yeah, so as a theme, to be very fair, we have been liking power ancillaries as such, and even consumer durables. Yes, Voltas is one stock which we always track, but have not been able to sort of buy it with a lot of conviction. We sort of had Blue Star in some parts of our portfolio, but some of these businesses, yes, on the merit of the business itself and the earnings and the cash flows that this business are getting, plus the type of revenue growth and the penetration that is still right now as an aspirational Indian, you are going to sort of penetrate this industry. This looks as a beautiful sector to be in. Ideally, yes, one, there is going to be power demand, there is going to be entire the new energy space or the new type of EV space as well, which is sort of a lot of companies operate into creating infrastructure for EV as well as this. So I think this is one sector, one theme which one should sort of stay invested.
Okay, we're wrapping up the trading session, last 10 seconds, and it's in good close, 0.5% over, 0.5% above the opening levels for the Nifty, 21,450. You also have the advanced decline ratio, which are looking quite steady. In terms of the various sectors, it was energy that was leading from the front because of the big surge that we saw at the end of the day on Adani Green. IOC, HPCL, Oil India, these were some of the other big buzzers. From the metals pack, it was NMDC, Hindustan Copper, Welspun Corp that deserve mention. And also from the auto pack, there's a bit of a rally on account of the Ola DRHP. So Hero MotoCorp, TVS Motors, these were some of the names which were fairly active. Laurus Labs, Divi's Lab from the pharma space also deserve mention. In terms of the big movers, it's J Kumar Infrastructure today with that around 20% surge. All the chemical names, so Alkyl Amine, Balaji Amines, Gujarat Alkali, Castrol India, Tata Chemicals, All Cargo. So the list is really long of the winners. On the losing side, however, it was V-Mart down about 5%. RBL Bank came under a bit of pressure. Zomato goes home with a cut of around 3%. So some of these losers as well. But overall, a good trading session for the markets. And we'll see how tomorrow pans out from the entire team who put this show together. Thank you so much for being with us.